People love beard. People like the tax law, but they stay for the beards.
Jacob Wood is Regional Director at Capstan Tax Strategies, where he builds long-term relationships and helps businesses unlock powerful tax incentives. In this episode, he shares how real estate owners, innovators, and business builders can access some of the most overlooked but most valuable tax credits available today.
What we're looking at is mainly real estate incentives and technology and innovation incentives. And the reason that Capstan focuses on those and that those are our business is that they touch so many companies. Those are the two most incentivized areas of the tax code, are people creating, building, making, designing things.
Hi, everybody. Welcome back to another episode of Brewing Business with Brady. Today's guest is Jacob Wood. Thanks for joining us, Jacob.
Yeah, thank you, Mason. Always a pleasure to chat with you, and excited to be on the podcast.
I feel like I've said this to a couple guests so far, but I feel like you're another one of my
guest.
Yeah, you're one of my bearded brothers that you have trimmed it recently, but you're one of my bearded brothers. That's one of the first things we called out is the beards when we first got to know each other. So
people love beards. I do a lot of education for, there'll be 1,000 people on a webinar or something.
Yeah.
And if I comment on beards, I'm like, you guys want it longer or short? Or people are like, people like the tax law, but they stay for the beards.
It makes everybody feel warm and fuzzy, just like it does on our face.
Yeah, nobody doesn't like a guy with a beard.
That's
exactly.
Oh, awesome. Well, yeah, I'm really grateful to have you here because, this is a topic we're going to talk about, specialty tax incentives, right? And this is a topic that you and I have worked together with some clients where ultimately we've achieved either some tax deductions, or we've pursued tax credits that are very specialty in nature, but are very powerful, very, very powerful for clients and the clients that we've worked with, but really for our audience to understand that there are specialty tax incentives that your normal CPA, your local CPA firm may not really specialize in. They may not offer as a service. They usually work with a firm like Capstan, where Jacob works, where that specializes in these particular items. And it's just, these are really powerful tools and vehicles to save a lot of cash on taxes for businesses to reinvest back in their businesses. I think, there's still a nature of our tax code is written to incentivize small business creation and growth. And, what we're going to dive into today speaks a bit to that. So I'm just really excited to have you here, Jacob, to really elaborate and provide some perspective for that. Too, I know you're not a boring tax guy, so this is going to be good that I know you're going to add some flavor to it, right? So, yeah.
I hope so. Yeah. I've got
awesome,
my dark French roast. I was my required drink, so I'm ready to go.
There we go. Yeah. That the key thing is that we all joined this podcast with our favorite go-to beverage. So glad you have your French roast. Did you just brew it recently, or is it a little cold?
I did just make it. So I did a French press out in my office, which is how I like my coffee. You can make it strong, and then you've got a whole French press thing to drink. So
fair enough. I love a good French press. I hate cleaning a French press.
Yeah. You got to do it right away. You got to get your hand in there, get the grounds. I mean, it's, you don't want to clog up your drain. So
no, I agree.
It does make your trash smell great though. So there is a silver lining there.
Yep. No, it smells great. It probably keeps away animals that I find, like here in Houston. I don't know if you're experiencing, this is totally off topic, but
sure, right.
like I'm originally from California, right? And I'd never seen this problem before, but on the highways here in Houston, like there's a lot of dead possums on the road. And I feel like, you got to be careful with your trash, which how long you keep it out there, make sure it's getting dumped regularly, that you don't miss the trash guy, because they'll get in there. And so I'm hopeful that the coffee grounds would potentially keep them away a little bit.
I think so. Yeah. We've never had that problem at our house, but I see possums, raccoons, all sorts of things. There's a lot out there in Texas. In California, I've had some people that say, hey, I'm moving to California because I don't like mosquitoes. And people that don't live in Texas may not understand why that actually does make some sense.
Yes. Fair enough. Yes. It's funny because we went on a family trip. My wife is from Chile. She's down in, her family lives down in South America. And it gets no hotter in Santiago, Chile, where my in-laws live. It gets no hotter than 90 degrees, right? And that can be warm, but with no humidity, it's like you can actually sit outside and enjoy the breeze, and it's nice. And like, yeah, we just can't do this in Houston, right? You just
No,
physically can't do
you know,
this.
it's we work with a lot of architect clients, and it's always funny because the western states that are dry, what I always say is the architects over there, like in California, are like, hey, what we're gonna do is we're gonna shade this, we're gonna daylight it, we're gonna get a nice cross breeze in, we're gonna open it up, we're gonna open up the space.
Yep.
In Texas, it's like, all right, we're going to
HVAC.
put triple pane glass. We're going to put an armed guard that's going to guard against humidity. We're going to lock everything down. We want to keep all the outside out.
Yep.
It's like, it's a
Yep.
totally, interestingly, from an R&D tax perspective, both can qualify, but very different considerations and solutions
Yes.
depending on your humidity and climate.
Yes. Yes. A lot more HVAC. A lot more HVAC.
Yeah, exactly. We're going to upsize this 10 tons more than we need.
Yep.
You know,
Yep.
so there you go.
So yeah, I'm interested to understand, you know, for fun here. I know that we're both fathers, right? That I'm a father of 3, you're a father of 4.
Yep.
But you know, tax code is one of those things that's very difficult to wrangle, as much as kids are difficult to wrangle. But what's your opinion? What's
Sure.
worse, wrangling 4 kids or wrangling and trying to understand changing tax codes?
Oh yeah, no, it's I mean, I definitely seek, as I recommend people seek help on specialty incentives, I seek help from my wife frequently, who stays at home and does a little combo homeschool thing with the kids, and she's the real master. I just kind of stay in my lane and you know, wrangle them as needed, but she's the real maestro there. So I would actually say the kids are probably harder than the tax code.
Fair enough. Yeah, it takes 2, right? That you can do tax code by
Absolutely.
yourself, but it takes 2 on the kids.
Yep.
Takes
Yeah,
a village.
definitely.
I don't know if it takes a village for taxes, but it takes a village for kids.
It
Right?
definitely, yeah, one lone guy can do your taxes, but
Yep.
yeah, you need a village for the kids,
Totally.
100%.
As we mentioned, we're going to dive in here. You know, you specialize in R&D tax credits, cost segregation, 179D deductions. You know, those are some terms that are pretty elusive to people. Like, what in the
lot of
world do
people.
those mean? Can you kind of give us a specialty tax incentives 101 that kind of covers for our audience, like what in the world do these things mean? Like what conceptually are these things?
Yeah, absolutely. And you know, there's a whole umbrella of different kind of tax incentives or tax questions that you can get into, right? And so we cover some of the main ones that apply to a lot of companies, but there's other things out there. There's like international tax issues. There's, you know, kind of all sorts of things, and you kind of have to look at these on the spectrum of like how novel is the question or how repeatable is it, right? We do in our consulting practice a lot more of these kind of repeatable things that apply to a lot of people. There are even more special things where like you want to get a private letter ruling on your specific, very niche tax thing. So it's definitely not that. What we're looking at is mainly real estate incentives and technology and innovation incentives. And the reason that Capstan focuses on those and that those are you know, are our business is that they touch so many companies. Those are the 2 most incentivized areas of the tax code, are people creating, building, making, designing things. That's kind of the innovation side, which would be R&D tax credits. The other piece of it's real estate. You know, real estate is 20% of GDP. It touches a myriad of things, and you know, pretty much every company is either innovating or they own some property, right? And so that's why we look at these. Now, why does your CPA not do them, even though they apply to a lot of people? Most of the time, CPA firms, unless you can do, you know, 5, 10, $15 million of business in one of these incentives, you really can't make a viable business because it's just too specialized for that. So if you're a 50-person CPA firm, there's no chance you have enough clients to actually need this. You may have some good opportunities there, but you're not going to have enough to make it a standalone business. And it really has to be viewed as a standalone kind of business unit. It's not like an add-on. There's a lot of things in the tax code that if you're CPA or, you know, CFO, you can kind of go and check the box. I call those like check the box incentives, where it's like, did we do it? You know, yes, we check the box and we get it. Things like an R&D tax credit take some specialized analysis, interviews, data science. There's a whole slew of regulations and court cases on them. And so that basically requires somebody to go through and analyze and have a systemic process that they can follow. And so that's why, you know, that's why the industry exists, and that's mainly what we do.
I mean, to put it into tangible terms, like, you know, R&D tax credit report for a client, what would you say the average size is in total pages?
Yeah, I mean, in total pages, like if you've got a statistical sample, data, you've got interviews, documents. I mean, it may be something like 100 pages, 150 pages. Now, not all of that is like drafting. Some of that could be documentation. It could be photos and screenshots and notes and stuff like that.
Yep.
Or it could be the statistical sample analysis to actually do the analysis. Because if you're looking at a company that has 20 business units and 30,000, potential R&D activity projects a year, you have to use data and
Yep.
data science to go through that. You can't individually review all those projects.
Yep.
So there's a whole methodology to it. But
Totally.
yeah, it's a fairly robust process for sure.
No, yeah. I mean, we've been through some of these, but I think they're powerful. But like you said, it just in terms of capacity planning, right? That it's not like everybody just has on staff, somebody to punch out 100-page report, even though it may be a variety of photos, et cetera. But
Absolutely.
when you're talking about getting regular tax filings done and meeting tax deadlines and filling out 1040s and all this stuff, do you really have people on staff just ready to pump out multiple 100-page reports at
Exactly.
moment's
Yeah.
notice? And probably not, right?
And even like, for example, like on the cost segregation side, I know we're going to talk a little bit about technology in the future, but we've really tried to integrate technology to support the analysis. But for example, like the average cost segregation engineer at your typical company, other provider, or maybe at a CPA firm gets at most maybe like 50 reports out a year, like 50 properties. So one a week, they're drafting a report, they're going out and doing it. And it's maybe because they're doing other things as well. Like they're not just doing that. Our average person will do 100 to 170 reports per year. And the reason they're able to do that is through technology, but also that specialization, right?
Yep.
And then the more of that you do, the more you learn. And if you're constantly improving, you can do it more efficiently. So, I mean, that's why as a consulting model, it's a fantastic business. It's a great thing to add on. But if you've got something, you bought a piece of property, you developed a new product, there's something that falls within this. This is why it's so good to work with a specialist, because you can get it done faster, less expensive, and with less risk than you could otherwise if you did it internally.
I mean, a part of it too, right, is, I mean, if you're going to take advantage of these sizable credits, you got to have proof if you get audited that, why do you feel that you should be allowed to take this credit, right? And there has to be some substantial proof to back up the reasoning for taking the credit that, tax code wants you to take the credit if it applies, but if it doesn't apply, it's fraud, right? And so it's critical. For layman's terms here, I want to dive into some of this just a bit here, at a
Yeah,
high
absolutely.
level. Cost segregation. So for our audience, if they've never heard the word cost segregation before, what are we talking about?
Yeah. So cost segregation, what I love about it is it's a fancy term, so it sounds like all cool, but really what it is it is matching tax treatment of a building property improvement to reality. So what the tax code says is by default, every property is going to be 27 and a half or 39-year depreciation, meaning you spend $1 million, you take 1/39th of $1 million, and every year you get a little bit of depreciation, because that asset, you can't just write it off, right? It's a depreciable asset, so you have to depreciate it over a number of years. Everything goes into that by default. What people said about 25, 30 years ago when this industry was starting to get formed is several savvy attorneys, CPAs, and so on, and property owners, frankly, started saying, I bought an MRI machine and it's not going to last 39 years.
Yeah.
And there was a case called Hospital Corp of America. And basically a hospital said, hey, we've got all sorts of stuff in our building, in our hospital, that is not going to last the life of this building. And so we want to depreciate it faster. And, IRS basically said, hey, nope, we've just got this one category. You can't do that. The court actually looked at it for like 75 pages. They literally went through, they're like, what about the elevator? What about the elevator shaft? What about the escalators? What about the structural supports in this room? What about the HVAC system? They literally went through each element of the building and they said, is it reasonable that this thing is going to last 39 years, or is it going to fall apart, right?
Yeah.
I always say if you go into like you're looking for a home, right? And you walk into the home and you kind of get that, like, maybe it's a little musty, the lighting's bad, and you're like, oh, this place needs to be updated. All that stuff you're looking at depreciated faster than the structure that you're standing in.
Yep.
And so what cost segregation does, it allows you to accelerate the depreciation of items if that matches, what happens in reality to those items. And so, but remember, incentives and credits are always the burdens on the taxpayer to prove that they are owed them, right? And so what you have to do is you have to have an affirmative study that says this stuff is being pulled out from the default because of X, Y, and Z. And so, again, what you're doing is basically from a depreciation standpoint, you are front loading those deductions. So you're getting the same amount over time, but you're getting them all today. So would you rather have a $10,000 tax savings today or in 40 years?
Yeah, I have no idea that I'm going to own the property 40 years from now.
Exactly. Some people refer to this as the interest-free loan from the government because it, in effect, if you sold the property in 40 years, you'd have to pay back the tax savings, but you're paying back at the exact same amount you took that savings at 40 years earlier. Yep. And so the whole value of this strategy is really the compound interest on the money you save. So anyway, very interesting, but very powerful. We've had people save $1 million and they hold the building for 10 years. Well, how much money can you make on $1 million in 10 years? Maybe another 2 million. Yep. So that's a big value for companies.
We consider it a lot with our clients that, they have a primary business, but obviously they want to build some net wealth and they would like, investing in real estate in a separate subsidiary is certainly a good alternative. And instead of leasing an office, maybe they buy it and lease it back to themselves, right? They would have paid the lease expense anyways, so might as well just lease it back to yourself. But get the property and do a cost seg study on it and depreciate it out, and it practically helps finance that down payment, right? That it makes it a heck of a lot easier. And so these are powerful things. I think real quick too. So we talked about cost segregations, R&D tax credit. I mean, R&D, standing research and development. I think the assumption of many can be, well, is my company really doing R&D? Like, I'm not pharmaceuticals. Sure. I'm not a software technology company. Does R&D really apply to me? And I think the surprising answer is, yeah, it definitely can. And so I'd love for you to explain more on that.
Yeah, the real trick with R&D and kind of the thing to think about is that there's two types of R&D. It really shouldn't be called the R&D credit. It should be called the applied research credit. And the reason is that there's kind of this concept of basic research, which is like university research, right? The US has always been one of the top countries in the world for the last 70 years in primary research. Go to Harvard, they're doing great research. It's in a lab setting, right? Where we have really dropped the ball and why this credit got enacted about 40 years ago was applied research. So you look at a company like Samsung in the 70s or whatnot, they came out with microwaves that were a tenth the price of American microwaves. They worked better. They had better, maintenance plans, and they could pump them out like crazy, right? And so the US developed all the microwave technology, but didn't actually put it in a saleable product that people could use. So that's what the whole point of the credit is this applied research. As a result, the standard is really not that you're coming up with new wavelengths or new, atoms that you've discovered and things. It's really that you're taking these technical principles and you're applying them in something that's a new or improved business component, which would be like a product or a process or something like that. That's the piece people miss. Everybody thinks about the lab coats. There's actually a court case out there that humorously enough says it's not just test tubes and lab coats. It could be applied engineering or things like that. So it's kind of a funny snippet to bring out because people think about somebody with a beaker and they're titrating something. It could be that, but it could also be taking that and putting it into a McDonald's Happy Meal toy that people aren't going to choke on and is going to last for 5 years and doesn't leach chemicals and can be manufactured efficiently and all those sorts of things. Yep. So you really need to look at what is the applied research of a company, and it really could apply to any industry. It could be, I've mentioned products, but software is a huge one. Manufacturing, engineering, other scientific pursuits, pharmaceuticals, food and beverage. We do liquor and wine clients. So there's a really big variety that you can find in the R&D credit.
I'm interested though, because again, I want to really make sure that we have a good idea of that definition of applied, right? The word applied that I'm thinking we've had here, and we work with folks in the agribusiness space. And one of the prime examples is, new variety development, right?
Sure.
That I worked a lot, in fresh produce and fruits and veg and, a new apple variety or new blueberry variety. who gets to claim the R&D credit? Is it the nursery that breeds and creates the variety and brings it to
Mhm.
market? Is it the farmer that actually takes the variety and plants it? Who gets the applied part of that?
Absolutely. So, one way to think about this would be that there's a finished product, which is the new variety, right? The other way to think about it, which is actually more of the tax code, is that it's a series of processes and steps in a value chain. Each step, if you are engaging in a technical process of development, you can qualify. So for example, the geneticist coming up with something or somebody breeding, that could qualify, but also somebody maximizing the yield and harvesting kind of at the farmer level could qualify too. The thing to remember for R&D, not only is it applied, but it is process based. So what you are getting is a percentage back. It's something like, let's call it 5 to 15% of your qualifying dollars spent back in the form of a credit. So if you spent, $100,000 developing something, you might get a $5,000 to $20,000 credit, depending on the federal and state incentives you can claim. There's a federal and there's state incentives, but we focus in on the process that people are following. So is it an evaluative process? Are they trying to make some kind of an improvement? The standard is very broad. It is that you have to be creating something that is new or improved,
Got it.
and that's it. And
Got
so
it.
there's a whole lot of inclusions and exclusions, but if what you are doing, so you can focus on the quality, the productivity of land, you could focus on, in agribusiness, there's a whole lot of considerations. What I always tell people is that it really gets down to more what your mindset and how you solve problems than what you're literally doing. So you talk about a farmer. I was just looking at an aquaculture client yesterday, and they're doing farming of shrimp and different aquaculture kind of products. And I was like, all right, this is either going to be one of two things. Either they're just going to be doing it and there's going to be no process. They're just going to kind of be following a process and that's it, or they're going to be incredibly scientific. Well, they sent us like a 30-page PowerPoint of all of their R&D kind of activities, and they're like, do we qualify? They had like tables and charts, and they're measuring things, and they're looking at yield maximization and number of number of offspring of the different type of aquaculture kind of like animals that they were creating. And I just started laughing. I was like, I think this is going to be a pretty good claim, because clearly they're keeping a good process and some documentation, but they're following an investigative process, and that could be in any area.
Got it. Got it. No, this is good
Yep.
background that
I can talk all day on this. So if
Yeah, right.
whenever you want to move on to other incentives, I can just point me in the direction and I'm there.
Fair enough. So I would love to understand, because I mean, we're honing in on the detail of, where these things apply, but what are some of the biggest misconceptions that business owners have when it comes to these
Yep.
types of specialty tax incentives?
I think some of the big ones is just people tend to not make a decision, right? So it's a decision by default. And that's the most dangerous thing. So if you think you're doing anything now on the innovation side, if you create or make anything, if you have a technologist, a software developer, a product developer, if you do manufacturing, like if you do anything in the wheelhouse of potential innovation and development, you should have an affirmative plan on whether you are claiming something or not. On the real estate side, if you own, develop, renovate any real estate, you should be looking at the cost segregation. And also, we didn't mention it as much, but there are a lot of energy incentives as well. And we can talk about those later, but those kind of are another bolt on to the real estate strategy. But if you have anything like close to these, you should get educated and take an affirmative plan, because not making a plan can get you into trouble. We've had companies where there's all these special nuances. There's one actually for startups on the R&D credit where you can offset your payroll tax before you have income tax profitability. So let's say you're a startup, software startup, you got 5 to 10 people, $1 million a year in spend, and you're developing an app. Well, you're 3 years away from profitability. And so you say, you know what, I don't need any tax savings because I don't pay tax. Well, the problem with that is there's a special rule that says in your first 5 years of any type of revenue, but maybe even pre-profit, you can offset your payroll tax, so your FICA tax obligation as an employer. It basically makes the credit refundable. The trick is that the whole point of this, it's very lucrative, it's very expensive for the government. they want you to do it in those years. So you have to claim it in the year that you spend the money. So you can't go back at year 7 and go, what can I get on payroll offset? As a result, I've had like literally millions of dollars of clients. Like I had one where somebody was like, "Hey, we put this off for a couple of years. We're a technologist that does AI, printing and such for manufacturing groups, and we make boxes and we do all this cool stuff. We're at year 6 now. We think we're going to pay tax in the next couple of years. We want to look at this." And I was like, "You guys basically threw away like $700,000." And you talk to somebody that's trying to get funding. It's expensive to get debt or equity funding as a startup, and to be able to get that cash flow for free could be another couple months a year of runway for that company. And it's a painful conversation when you're like, well, you could still claim a credit, but you're not going to get it for this. So again, my overall point is just whatever the strategy, you want to have an affirmative strategy. Either we're claiming something now or we're not, but we're educated on what the rules are and we're setting a plan for the future, right? Because if you do anything in these wheelhouses, something eventually will apply to you.
Yep. Makes sense. So yeah, to that point, I'm interested to understand, like you brought up a client example that was using AI. I'd love to start asking this question more because it is becoming more of a reality of AI's influence in business, right? But how do you see AI and automation transforming tax strategy and financial planning? It was interesting. I was at a talk and there was a comment that basically said like, yeah, like if you're a legal assistant, go find another job now, right? Like, or if you're looking up, legal cases, if like that's your job, you're a legal assistant, like go find another job now, right? But I'm interested to understand because especially within tax, like it's a lot of written code, right? And it's a lot to read through, to understand, to sift through. So yeah, what do you see in this space?
Yeah, absolutely. I think it is interesting, and I'm piloting several like AI things right now myself, so I'm kind of seeing, what they're doing. It's just a hot topic. I would say in the broad scope of things, this is near and dear to my heart because in the R&D world, anytime there's a technology sea shift or sea change, we see it, right? So Internet of Things. These will lead to entirely new R&D areas. So HVAC is a very interesting example in the sense that 40 years ago, it was all like pneumatic. It was kind of like manual controls. You just put the stuff on the wall and then it just kind of, you hoped that the system was balanced, right? For an HVAC setup. Now you can program, you can control, you can zone things. And so the companies that used to install that equipment did not qualify for an R&D credit. Now they do, because they have software developers. Like there's no such thing as just an HVAC controls company. Now they're a technology integration company. So whenever you see AI or you see any kind of a new thing come out from our subject matter, we see it in our clients, and that can lead to qualification for R&D. In our business, how we do our business, I think that the tricky thing is that the value add and the secret sauce is all in the analysis. Where people have really tried to, I think a lot of the money has gone into automating the analysis side of things instead of automating the data and task side of things. And I'm just a proponent of, the IRS comes out with new cases all the time. There's regulations. You can summarize this stuff, and that's a big value add from an AI perspective. But in terms of making the judgment call on it, you definitely don't want to automate that stuff because you want to have you don't want it to be like a deus ex machina. You want to actually know what's going on and what decisions you're making there. So I think to the extent that you can automate the manual side of things, the amalgamation, the formatting, that kind of thing, this is very powerful for the industry and people doing things in the financial legal services. I think whenever you get to the actual like analysis, you want to have a human check on that. And I think certainly some aspects of it, right? So like I began my career as an attorney. I'm a licensed attorney in Texas. I then got into tax consulting and kind of grew that part of my career. But the part of my job that I do now is a lot of like education, business development, it's strategy. It's kind of looking at the nuances and then applying them to the business settings. That stuff is pretty hard to automate, right? Because nobody's going to buy from a robot. Now, if I want to use that to get what the strategies are and then I explain them and kind of weigh them and balance them, that will make me more efficient. But I think there is kind of a limit, and you have to figure out what is the shape of that limit for any task that you're doing. You probably see some similar stuff in what you're doing, right?
Yeah, I mean, I just again, I think it's an automation of tasks, but the final judgment call still it's a manual process, right? That I don't trust, a financial analysis put together by AI yet. I haven't seen one that I look at, and especially within small businesses, I could see AI being used amongst public company reports because there's a level of standardization.
Sure.
Because once you get that big, the level of standardization in your accounting practices and getting audited by the big CPA firms. I mean, you're talking about 4 to 5 major CPA firms, that have consistency in their audit practices and their expectations, and therefore what's being put out in regards
Hmm.
to public company reports. That because of that standardization, an AI model can look at things similarly. But it's even for us, like, I love a good industry benchmark report for small businesses, but when they start trying to do a common size analysis of the
Sure.
financials and they say, yeah, on average, businesses in this industry have 60% gross profit. I'm like, that can be all over the place with every business. With small businesses, especially, simply as a result of their accounting competency and the quality of their financial records. Like, how can you say that gross profits are consistently 60%? Like, that may be what they report, but that may be because they're not posting things in the right place, right?
Sure.
So I think it's really tough to analyze that very well. So like, you need a level of judgment in that, right? Of actually, determining, is this right or not? That is the data of the quality of the data that we're looking at. Now, I think AI can help supplement that, but again, I would agree with you. The judgment call on it is still not there, right?
Yeah, and I think from like a personal standpoint, where I see it most useful, all these things came out like a year or two ago, where it was like we're gonna AI your notes, right? So it's all these like note takers logging onto your meetings and they're summarizing stuff. And I was like, you know what? I can take notes fine while I'm talking. And actually, the notes help me because then I go back to the notes, so I need something real time where I'm like, and I'm summarizing the key points. I'm not writing what the person's saying, right? Where I think it's been really valuable, I've seen some tools and I've piloted some of them where it takes the notes and then it sends you an email that says like, is this correct? You can kind of edit it. And then what it'll do is it'll automatically go into your email, draft a follow up. It'll put the bullet points that you kind of agreed on, and then you just review it and hit send.
Got it.
That's something where to me is a blend of the analysis, like your judgment call, but also automating kind of the tasks and the things that are being done. And I think as these things get more sophisticated, that thing's not going to be just drafting an email. It's going to be updating the CRM. It's going to be putting notes for the future. It's going to be setting tasks. And so
Yep.
then me doing what I do best, right? Because like I make the most money when I'm talking to people on the phone, right? And I'm like actually explaining and we're strategizing and we're weighing objectives and I'm helping them plan. I don't, I don't make as much money, to put it in those terms, when I'm typing a follow-up email, right? I mean, like it's necessary, but it's not a huge value add. So if I could be in the driver's seat of phone calls and things like that more often and be in front of people and connecting with them, but then those other parts are kind of all automated and I'm making decisions, that's a big success. And that's going to drive efficiencies in the market. So probably
Agreed.
similar to some other industries, but that's kind of the way I see it from where it is right now.
Agreed that, I mean, I think it just still comes back, because as you were saying that, I was thinking of an example. It still just comes back to, though, the management level judgment decisions that have to be made. I
Sure.
just still see struggle around it. And I'm thinking about, we've been in board meetings and we've actually had legal advice to not use the note taker because at that point, everything mentioned is on record, right?
Oh yeah, I know.
And it's like, you don't know if you really want that when, yeah, you are talking about an employee or this or this or that. And it's like, I mean, you want to operate your company in a transparent way and an honest and integrity filled way. But at the same point in time, I don't know that we want a recording of of all of our judgment conversations, that, especially in today's world where I think most business owners would argue that and maybe this is the California in me that I need to leave back behind, but the political
Sure.
correctness with everything, right? That it's like, oh, I can't say this, but yet everybody in the room knows it, right?
Everybody knows what you're talking about. There's actually a great, I don't know if you're a fan of Black Mirror, but there's a great episode, and I think it's called like The Entire History of You. And it's a world where people have a chip in their eye that can basically remember everything.
Oh,
and so like, a guy goes and talks to his wife, and then like later she's like going back, or maybe he's going back, and he's like, was this person really paying attention? What were they looking at? He's like zooming in on the phone. He's like, she was looking at something else. And then he's like second guessing it. So there's certainly a dystopian, element to it. And I'm a big fan of dystopias. So, or at least exploring them and reading about them. Right. And it's probably my favorite sci-fi genre, but, I don't know that I necessarily want to live in one.
I agree.
That could be the title of the podcast. I don't want to live in a dystopia. Like,
there we go. Well, I think, after November, some people may have voted a particular direction. They feel like they're living in a dystopia, maybe. But
it's more of a chaos-topia, I would say.
Right? Are tariffs happening? Are they not? I don't know.
Pick your topia. I don't know what's happening anymore.
I mean, it came out, the press secretary, she said, hey, campaign promises made that, we're going to implement some tax changes in regards to not taxing tips, not taxing overtime, different, incentives, funny enough, around, sporting stadiums, and stuff like that. But for the business owner, are you seeing anything coming down the pipeline that business owners should be aware of? Because all of this seems like this is out of their purview, right? That somebody tips on, or taxes on tips and overtime, at least income taxes. That's not applicable here. So for a smaller mid-market business owner, is there anything that you see that we need to be paying attention to this?
Well, I can tell you as a service provider myself, I'm going to be accepting tips on all future engagements if those things are non-taxable. So speaking of a dystopia, we may end up with some bizarre rules and things as a result of that. But
a lot more overtime on everybody's.
Yeah, exactly. I worked like 2 hours. It was just overtime, and it was all tips. There you go. Right. I want to see that K1. But I think there are some big things. So it's interesting because since the administration currently was in power 4 years ago, they passed the Tax Cuts and Jobs Act, had a lot of things in it, was very expensive, but also built a bunch of ticking time bombs in it. Like for R&D, there's this thing called 174 amortization that you have to do. And it basically just changed some of the numbers around. It wasn't very popular, spiked tax rates for people in the short term. It's going to be very popular for the administration to extend or fix some of those things that were part of the TCJA. So I think that's probably the most likely thing, because what administration doesn't want to create an issue and then become the hero that solves that issue that was their own issue.
Do they time that? Yeah.
It's kind of you're like, I don't know. It was, I don't want to get too Illuminati, but there's definitely some benefit of the fact that they're now picking up these pieces. The other thing is the Inflation Reduction Act, the IRA, passed under the Biden administration, actually also had some very good, it had some kind of wonky, but had some very good things related to energy projects. So a lot of energy projects had to do, they said, hey, you can get more deduction if you want to be energy efficient. Great. But then kind of the union lobby got in there and basically made this thing called the prevailing wage rate requirement. So if you're going to take an energy deduction, right, we're doing an energy efficiency project, we have to also pay prevailing wages. Now, it's not wrong to pay prevailing wages, but it greatly increases the complexity of the projects. And really what I've seen is it's not much of an incentive. It's just kind of you either pay it or you don't. Like if you're in San Francisco, you're paying a prevailing wage because it's just a high wage area. If you're in Houston, Texas, you're probably not unless you're in a union. And so as an incentive, it's not quite valuable enough to really move the needle. Now, Trump administration has basically said they don't like these prevailing wage rates. They are too complex, and it's mixing too many incentives, which is a fair point. So if those go away, I think what you'll actually see is it's going to be a simplification of many of the IRA's positions. And so you're going to see more people be able to claim production tax credits, development tax credits, investment tax credits, 179D energy credits, deductions. And so that would be a very positive thing. So I would say your general business owner, what the reforms that they would put in are going to do is it's going to make it less expensive to do R&D. It's going to make it less expensive to do capital investment or energy investment projects. Those are the main things. So if you're going to spend some money to develop, to purchase, to build, that kind of thing, those are the types of activities that are going to be protected and incentivized if with the tax reform.
Good to know. Yeah, great. So yeah, we're kind of coming to the end of the episode here, Jacob. So
yeah,
what we like to do, we're introducing this kind of new concept where we do some rapid fire fun questions to
sure,
have some fun with. So this is actually what goes on LinkedIn, right? These
I've
are
got
what
it.
makes
Yeah,
up the
oh
video
boy.
shorts. So yeah, what is the most tax nerd thing you do in your daily life? Like, I've seen engineers create budget spreadsheets for vacations, like tracking every purchase. But what's the most tax nerd thing that you do in your daily life?
You aside from talking about it all the time, I would say to be in an industry and to really love it and to like share it, you actually have to do it. This is like my number one business principle is like you have to become the thing you want to be. You can't fake it, right? You have to actually do it. And so I read tax policy stuff all the time. Like I'm in Wall Street Journal. In fact, I'll be in a conversation with somebody and I'll know that they read the Wall Street Journal that week because they'll be like quoting the tax stuff. And I'm like, oh yeah, I read that article, but I'm like, they're not saying they read an article. They're just talking about something, but I'm like, that was some good analysis. Yeah, it was. So, economist. So if you want to get better knowledgeable about this kind of stuff, there's a lot of good technical analysis that happens in major newspapers and trade journals and things. And that's the thing that I love those things. I read them in my spare time.
Fair enough. Okay, that is very tax nerdy.
I also did propose when I got married, not actually signing the paperwork because I did our tax calculations and I found out that we actually were going to be better off if we didn't formally get married. That was quashed by my mother-in-law.
Yeah.
It was a very unpopular opinion with the proletariat. So we did not end up doing that. But
that is very tax nerdy. But great way to start an in-law relationship.
Yeah, exactly. I was like, what if we just don't do this? We do common law or something. I was like, nope, not part of the strategy that was approved.
If you weren't in tax strategy, what career would you have?
It's funny when I went to college, I was pre-med and it's funny because I loved emergency medicine as a Boy Scout, all this stuff. And I took a Kaplan, like a 2-hour questionnaire and it was like, what should you go into? And it was like, you should go into consulting, law, and what was it? And in sales, right? And I was like, nah, I'm going to med school. And, flash forward like a year or two and I basically ended up on that track anyway because I feel like I was good at it. So I think if I was not in tax, I'd probably still be in some area of law or sales. I mean, what I love being is a technical expert who gets to kind of talk with people. My son loves to listen in on calls. And so if he's around, he's kind of homeschooled, so he's got some time. He'll sit in and just listen. And he said one day, I want to do what you do when I grow up. And I was like, okay, well, what's that? And he goes, you have a lot of friends and you talk on the phone with them all the time. And I was like, you know what?
Yeah.
Take that. If it wasn't tax, I think I would be doing that in some other area.
A solid job. Yeah. Fair enough.
I was like,
solid
that's a great way to say it.
He understands it well. So great. Like go through many years of schooling, through technical hard knock schooling, and then talk on the phone.
Yeah, exactly. Right. Get to hang out. Great. A lot of good lunches.
Yeah. Well, thank you, Jacob. That really appreciate having you on the show. Where can listeners connect with you, learn more about you, Capstan Tax Strategies? Where can they figure out more about you?
Absolutely. So I am I'm on LinkedIn. So you can search for Jacob P. Wood at Capstan Tax. And I do a lot of posting, a lot of liking, some funny comments. I like dad jokes, like beard jokes. So you can see me there. Also our website, capstantax.com. We just got a ton of good resources on there. We put out blogs and podcasts and stuff. So if you want to get connected, you can actually subscribe to our newsletter. And we do it when there's updates and stuff. We try to be the first people out there to give you some insights as well. But would love to connect with folks.
Awesome. Well, what's some final words of wisdom for business owners looking to maximize tax savings in 2025? What would you leave them with here?
Yeah, again, I would say you want to have an affirmative plan, whether you do something or not. Yep. You want to be educated on it. And so for us, we love forming good relationships. We love to be engaged with somebody from a consultative approach long before there's a project. So I
Got
would
it.
say have somebody in your corner that knows about these incentives that can educate you. So when it's time to make a decision, you already have a plan in place.
Yep.
So I would say make an affirmative decision whether you do something or not. You want to have a plan in place.
Awesome. Great. Yeah. Thank you, Jacob. Thanks for joining us today.
Excellent. Thanks for having me, Mason.
Awesome, man. Thank you.